Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. All right, traders, we got trades lined up for Thursday. It is July 10th, 2008. And let me tell you something, traders, this is a very, very tricky market lately. I know you analysts out there that have been following indicators find this very confusing because it is. This is a very difficult area in the markets to be trading, especially technically, but there's really no other way to trade successfully over a long term to get decent results that I've ever found, except for technically. So you have to deal with the tricky times when they come up. You cut back to basics, go down to one-lot trading if you have to, if you're more than a one-lot trader, and trade through the difficult times. Now, yesterday, markets looked like we're going to get a nice Wednesday rally. We set up a trade to catch that, but we also mentioned to you traders that if the markets moved higher first, we would cancel our buy orders because then if it came down from there, we wouldn't want to get in. Well, that's exactly what happened yesterday on Wednesday. S&P opened higher first, went up to our resistance level. We never had a chance even to get filled. We canceled our orders immediately and got out of harm's way, got out of the market's way. The market ended up coming down, and we didn't trade for the day. So the analysis did tell us, get out of the way if it goes higher first. So at least that worked. Now, interestingly enough, we went from looking for the upside Wednesday to having no choice but to call the downside for Thursday. So for Thursday, we got a red omni for the downside. We're also looking at the British pound, and there's a cocoa trade that I'm looking at, traders, that I will probably keep reserved for the premium room members. So you premium room members, get in touch with me, and I'll let you know what parameters we have set up for the cocoa trade. All right, traders, I want to show you a couple of charts now. And, you know, I'll tell you about something first, and then maybe the charts will help to clarify that in a small way. Indicators have flipped towards the downside in one day. But basically, I have been trading and studying technical analysis since the early 1980s, traders. And when I talk about study, I am talking about every day, every night, studying. I've gone to analysis classes. I've gone to the New York Institute of Finance and studied under John Murphy. I have really studied analysis every day of my life. And what I have found since the early 80s was that when you get into a bear market, generally, you'll get two nice rally days, and then the market will flip and head back down. And that I can say I could just about count on all the bear markets I've ran into in my trading career. Well, let me tell you something. This particular bear market that we're in gives you a half a day up and then says, forget about 2 days up. I don't even want to know about it. And it starts to go right back down again. Sometimes we get 1 day up and the next day it starts and just turns and flips. So the market dynamics are beginning to shift a little bit, and so must our rule base. And now for this particular bear market, we can't look for the 2-day rally to get short any longer. It seems to be more like a day, sometimes a day and a half. So keep that in mind. And with that in mind, let me show you some charts now to see if I can bring that into focus for you. Okay, traders, the first chart you are looking at is the Dow Jones Industrial Average Daily Bar. And I just wanted to remind you once again before we go further, major head and shoulders developed, and we broke down seriously, got right down to the projected move off of the head and shoulders formation. And then we marked a little time sideways and began to build another head and shoulders formation, as you can see right here. Boom, boom, boom. We have our projections for the downside. We have not quite gotten there yet, as you can see. We are on our way down, and I can't imagine anything that would stop us from eventually reaching the projections on the downside. Sometimes you get little rallies in between in bear markets, but basically the stage is set like it was back here. It's set for us to make a nice drop. Now I'm going to zoom in on this chart for you slightly because I want to show you what it looks like, the daily bar between yesterday and the day before, or I should say between Tuesday and Wednesday, and what an outside reversal down day would look like on your charts. Okay, traders, the next chart you're looking at is the Dow Jones Industrial Average Daily Bar, but zoomed in a little bit. Same chart you've seen before. Of course, this is that head and shoulders that we're dropping out of now. But here is the outside reversal down day. The market had a day on Tuesday. Wednesday, it opened, rallied higher than Tuesday's high, dropped lower than Tuesday's low, and then settled lower than Tuesday's lows, giving us an outside reversal down day. Again, let's say you had a day that looks like this. If the next day you open, rally higher than the previous day's high, drop lower than the previous day's low, and then put in a settlement lower than the previous day's low, that would be considered an outside reversal down day. So there we have it, a key reversal, an outside reversal. Call it what you will. That is a reversal day, telling us that likelihood is now right back down again. Let's go look at another chart and see what we have there. Okay, traders, the next chart you are looking at is September S&P daily bar chart, the September daily bar. And as you can see on that September daily bar, we ran right into a resistance line. And in fact, I think I want to zoom in on this. Mike, can you zoom in on this for me?
You got it.
Okay, right here, as you can see, we tagged a resistance line and then turned around and dropped immediately. Immediately turned around and dropped. We had no two-day rally. We had a day, and then it just turned and dropped the other way. And that's been happening for the last 3 or 4 little rallies that we've seen. They haven't even lasted 2 days. And the 2-day rule, which is sell 2 days rally in a bear market or buy 2 days dip in a bull market, seems to now be changing. The dynamics of that rule seem to be changing where you do not get a full 2 days out of it. So let's pay attention to that and be careful moving forward. So as you can see, we hit that resistance line, and then immediately the indicators began to turn back down south, as you can see here with the commodity channel index, and many of the other indicators that we look at immediately turned south when the market failed the S&P at 1278 and 75 on Wednesday. So here we are now. The market turned and dropped. You have an outside reversal day in the Dow Jones. You hit your resistance and broke down. Your indicators are turning lower. That absolutely points to a red Omni, and that's what came out today, a red Omni. So very interesting, traders. Do your own homework. Take a look at your charts and tell me what you think. So you've seen the charts. Traders, outside reversal, smacking into the resistance and dropping. Indicators quickly turning. Now we're into Thursday in a bear market. The week is coming to an end already. The market can't sustain more than a day or a half a day's rally. I say we got to go for the downside. And with that in mind, for Thursday, 7/10/08, we have a red Omni in the Emini S&P. We say sell the Emini S&P in the mid to high 1250s. Trading 1250 right now, traders. So get your orders in. For you traders that don't come to our site, make sure you place your stops. Place them first and be wise about where you put them. A wide stop is necessary tomorrow. I kid you not, traders. Volatility is insane lately. All right. So you're going to sell in the mid to high 1250s. Omni's profit objective is the mid to high 1220s or be out MOC. This thing could crack below the 30s and get into the high to mid 1220s tomorrow if they start to lean on it. So do yourselves a favor, do your analysis, see if you agree with that trade, and get yourselves in and put your stops in and see what we get out of this. Traders, as you know, we always place stops, so our risk is predetermined. And it's easy to relax when you know what you're going to lose if you do on a trade. It's one thing to put a trade on and go, I don't know what's going to happen. I don't have a stop in, and you're nervous all day. Well, that's not going to help you trade. You need to stay calm when you trade, and you don't need to rethink your analysis all day. Once you've done your homework and you have a trade plan for, you trade that plan, and that's that, and you do it every day and every evening, and you will see that you will get into a groove, and it will help you understand markets. So get your stops in. Stop worrying about where you're going to lose because that's already covered, and understand these markets. All right, traders. I think that I don't really want to do much else in this video. I will give you my number. It's 702-629-4755. As I always tell you, don't trade alone. Never trade alone, traders. It's so much easier when you have a crowd around you, and that's what we have at the Emini Trading Academy. Come on down to our site. It's www.livewithoscar.com. Grab a free membership. Come into the chat rooms and let us teach you how to do technical analysis. All right, traders, thank you so much for watching my videos. If you'd like, send me an email at oscar@futuresanalysts.com, and I will see you tomorrow. All right, traders, thank you so much once again, because I really do appreciate your patronage. There are so many of you Omniacs that come to my site. Thank you so much for showing up. I really appreciate that. Traders, last but not least, I am a broker. I want you to know that I can help you trade. I can help you place orders. I can watch trades for you. I can act as your coach and mentor. If you'd like to open up a trading account with me, simply come on down to the site, click on the picture on the home page of me, and you can open up an account just like that. Okay, traders, what we've been doing is asking you to go to our YouTube spot every day and watch the videos that we produce for you. These videos are timely, and they are made for the next day's trading. When you get there, please rate those videos, leave comments. Traders, those comments, they're not for me. I want you to leave comments to help the traders of the world out there that haven't found our academy yet, that need help, that don't understand the analysis or the markets. So if you leave comments geared for those traders, you will help me help the traders of the world out there. So you Omniacs that are already part of my site, rate the videos at YouTube and leave comments for the new traders out there. Okay, traders, I will speak to you tomorrow, as I said. Don't forget, I'll be in the chat rooms all day and all night to help you, as I always like to be. I'm always watching those rooms. I'm always watching the markets. So come join us. All right, traders, last but not least, say this to yourselves every morning, every afternoon, every evening. Say it when you're in your car on the way to work, when you're doing your analysis, and especially when you've placed your orders. And you know what that is. Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.